Welcome traders. I just want to make this quick educational video on finding good entries in different instances in the market. So there's three different instances. There's uptrend, so this is when the market's going up. The second instance is consolidation, so this happens when the market is just moving sideways, there's no trend to it. The third instance is a downtrend. So in an uptrend, when the market is going up, it usually follows market structure, so it creates higher highs and higher lows. So it looks similar to this. Okay, so in an uptrend, obviously you do not want to be selling the market, and a lot of people what they do is they go on different time frames and they don't realize what the overall market is telling you, what the overall trend is. Say for example, on the daily and weekly time frame, it's showing you an uptrend, but on the 4-hour and 2-hour time frame, it's indicating bearish pressure. Of course, some traders, they would like to they would enter a sell position for quick pips, but you do not want to trade against the overall market. You don't want to be trading against the trend. So as William D. Gann once said, he's a legendary trader, don't enter a trade if you are unsure of the trend. Never trade against the trend. So in an uptrend, you only want to be buying. You do not want to be selling. So these are the points which you want to be looking for potential buy opportunities, right? So it's these points right here in the market. So after the retracement has been finished and the impulsive move is about to occur. All right, so you don't only want to be looking at the market structure. You obviously want to be looking for other confluences as well. Say for example, this right here is a support level. Maybe you can use this. This is a support level. There's a rejection off of the Fibonacci tool as well, and maybe even a candlestick formation forms. Maybe a bullish engulfing or a bullish shooting star. Anything to show you that there is going to be a lot of sellers entering the market. That's where you want to be entering a buy position. All right. So once the retracement has been finished, you're trying to catch the big move, the big impulsive move. These arrows right here would be considered the big moves because the market is going up, right? So you want to be able to catch the market when it's following the trend, when it's going upwards. Now, instant number two, this is consolidation. So this occurs when market is just moving sideways. There's no structure to it. All right. So usually in a consolidation, in a ranging market, there is a major resistance and a major support level. All right. And in this situation, what price usually does, it's just stuck between the resistance and support. It cannot break out. Right, so what you can do in this situation or in this instance is you can either wait for a breakout to occur, right? So for say for example, price breaks the resistance, okay, you wait for the retest, and if price is able to maintain above the resistance, now support, and is able to maintain above this resistance, you will look for a potential buy opportunity. All right, because then once price has broken through this consolidation, it will continue in an uptrend. It's the same thing if it breaks down to the downside, then it will continue in a downtrend. All right, say for example it breaks like this, all you're simply doing is waiting for the retest, and then you're looking to sell the market. All right, so this is the first thing you can do in the consolidation. This is one thing you can do. The other thing you can do in a consolidation, if you're a more experienced trader, that is, you can wait for price to come up to the resistance, and then you can look for potential sell opportunities here. You wait for the price to come down to the support, you look for buy opportunities here, and then you're just selling and buying the market depending on what the price shows you. So on the support level is where you'll be looking for buys. At the resistance level, you will be looking for sells. Now, there is something called a fake out. So this usually occurs when the market spikes all the way up through the resistance but still has a body closure below. This usually occurs when the market is manipulating all these retail traders that are looking to sell the market around this area. So you do want to be wary of the fact that there could be a huge spike to the upside, hitting your stop loss and continuing down to the support level. All right, so as long as you're wary of the fact and you use your stop loss accordingly, I believe this is a very good way to trade as well in the consolidation. Now, the third instance is the downtrend. The downtrend is very similar to the uptrend in a sense where you're just looking to sell the market instead of buying it. All right, so in the downtrend, it's creating lower lows and higher lows. So something like this. All right. So these are the points where you want to be looking to sell the market. Now again, I want to emphasize the fact that you don't only want to be following market structure and entering sells and buys. You want to look for different confluences as well. Some confluences you can look for is, say, candlestick patterns. Excuse my spelling. And then you can also look for, say, support, resistance. As I explained earlier, you can wait for, say, price to come up to this. In this situation, you can wait for price to retrace all the way up to this level of resistance, and this right here would be a confluence for you to enter a sell position. All right. So this is only two examples of what you can use. There's multiple things. You can also use a trend line. You can use fibs. There's multiple different things you can use. It just depends on what type of trader you are. All right. So this right here, instant number one, in an uptrend, you only want to be looking to buy the market. These situations where you should be looking for entries. All right. Once the retracement has been finished and you're looking to buy the impulsive move. Instant number two, consolidation. You're looking for either a sell opportunity at the resistance, buy opportunity at the support, or you're waiting for a breakout. Instance number three is a downtrend. You're waiting for price to finish its retracement, and then you're looking to sell the impulsive move. All right, now I just want to give you guys a quick example of each instance. So I'm on USD CAD right now. This is the daily time frame, and as you can clearly see, we are in a uptrend. All right, so this right here would be considered the first impulsive move. All right, so let me just make this a bit more thicker so you guys are able to see. So this right here is the first impulsive move, and then as you can see, market tends to consolidate. All right, it tends to consolidate usually after a big move, but I'm gonna talk about this later. But so this right here is the first impulsive move. This is the retracement. Okay, and then over here is where you want to be looking for buy opportunity. At this point, you want to look to be able to buy this huge move, this next impulsive move. Price comes down to retrace. This right here is where you want to be looking to buy the market. It makes a new higher high. All right, guys. So it's very simple. As long as you can understand the basics of market structure, I believe you will have the tools you need to be able to understand which way the market is going, which way the market is trending, and use that as a confluence for yourself. So a confluence you can use, say for example, is this Fibonacci tool. You bring it to the lows all the way to the highs. One moment. So you see how price came down to 71%, it rejected. And let's see if there's also maybe a candlestick formation, right? So as you can see, there's also a bullish engulfing, right? So a bullish engulfing this candlestick it formed. So your buy entry would look something like this. You'd enter a buy position right over here. You can also notice that the MAs are crossing over to the upside. Your next target would be somewhere around this area, so depending on where the fib tool is, but I'm going to keep it at this key level right here, and your stop loss is just below this level, right? So this right here would be a perfect example of a buying the impulsive move. All right, so that's the uptrend. And in a downtrend, say for example, I see a downtrend here, is you're waiting for the market to come down. So you're waiting for this to occur, and then you're waiting for the retracement before you can look to sell the market. Okay, so this right here, so this is where you would sell. You wait for the retracement, you're selling again. You wait for the retracement, double top formation, you're selling again. And then this right here is where it breaks market structure. All right, so in this situation, these are the points where you would be selling the market, around these area. Okay, guys, so that is a downtrend. Now consolidation. Let's see if there is any consolidation here. Okay, so as you can see, there is a level of consolidation somewhere around this area. Okay, so as you can see, price comes up, finds a major level of resistance, finds support, you're buying, you're selling, you're buying, and then as you can see, this is what I was talking about, the fake out. There's multiple wick rejections, just throwing wicks on top of the resistance. You have to be very, very careful of how you place your stop loss, because price could just hit your stop loss and then continue on down. Right, so price comes up with the fake out. If you realize the fake out, you would wait for the retest. So as you can see, right over here, how the market broke above the level of resistance with this green candlestick, full body closure. We came up. You have to wait for the retest. Every time a resistance is broken, you wait for the retest to occur, And then from here, if say this candlestick did not have a body closure back below, you would look for a potential buy opportunity back up, back to the upside. However, this was considered a fake out, and this right here would be a good opportunity to enter a sell position back down to the major level of support. All right, guys, so that's pretty much it. You just, so these, I will bring it back down so you guys are able to see it one more time. So these are the instances, right? Instance number one, uptrend, you're looking to buy the market at these points. Instance number two, consolidation, you're either waiting for a breakout to occur or you're buying and selling. Instance number three, downtrend, you're waiting for the retracement and then you're trying to catch the impulsive move. Also, it's important that you look for other confluences as well in with these instances and these market structures.